In the corporate tax world, or I must say that in the world of taxes, every organization faces some sort of challenges because what it brings is a lot of heavy duty compliances on the businesses, and businesses need to really understand what's in it for them when it comes to tax compliances. We are here in the studio today with Mayur Agarwal, who's leader for the corporate tax with AIR, and we're going to discuss today some of the interesting topic that how his organization and himself looking into the tax regime for the benefit and more efficient structuring within the businesses to unleash the way forward for right compliance for the organization. So welcome back to Andersen podcast series Everything Tax, and today here we are discussing very relevant topic, friends, which we're gonna provide you a little bit more insight from a corporate implementation perspective. Not just only the law, but we also need to understand what kind of implications one should be watchful while implementing corporate tax. So Mayur, my first question to you, you've been leading this organization for quite some time, and you have seen that organization is multinational, multi-layered, quite complex businesses around it. How did you see the corporate tax impacting your business?
It was a very different for us, because you rarely see in this world any country bringing new corporate tax, because what you have always heard, this country has this tax, this country has this tax. So this is kind of a unique experience that UAE has gone through. It is one of the experiences of our life. So it was really challenging. We were working in an environment where we were very flexible. There was no taxes. The taxes were always on the other side, where the other jurisdictions where we operate, there was no taxes in the UAE. So now there is corporate tax, there is transfer pricing. So you need to properly align your TP policies, your pricing, your group structures, your legal structure to keep in mind the UAE as well. Because until now, everything was like, okay, it's UAE, there's no tax, there's no impact, we can do whatever we want in UAE. So it has impacted to a significant exchange.
I totally agree. I can't agree more about it. But one thing that remain very cornerstone within the corporate tax is that when you have multiple organizations, multiple operations, multi-jurisdictional presence out there, do you look into some sort of creating a kind of structure within the organization to formulate a tax group, or did you done your analysis and observed that individual entities are good enough to manage their compliances, though the burden will be slightly higher? Did you perform such studies?
So see, our entity structure is kind of, we have different functions in different entities. So we have a complex group structure where some entities are into manufacturing, some entities looking after some jurisdictions. And so, however, there are a lot of intercompany transactions and intercompany alignments. Now, corporate tax coming into picture, if we don't get into the group, that would have been a significant challenging position for us to, justify the intercompany transactions, keep that linkage in the way, whatever way we want. Now, getting into the tax group gave us an advantage that, okay, your companies which are in UAE, which are under the same tax group, under corporate tax, you can do whatever you want, because in the end, your consolidated tax returns, your whole as a one, all entities as a one will be submitted with the FTA. So that gave us a lot of flexibility. That was a very thorough research that we did when the corporate tax law was brought in first in 23 and 22, October 22. So it was very deep, very thorough research we had to do to get to this. But this was really beneficial.
I think many people, I agree with you, but many people believe that, forming a tax group is very simple structure. We need to look into the free zone benefit, that whether this thing allow you to have an access to the free zone benefit. It'll reduce the burden from a transfer pricing perspective. You need to have the benchmark transactions. You need to have the TP policy around those transactions, which is intergroup. Is that your thought process around it, or there is more to it? Our viewers would really would like to understand that when you decided tax group versus individual entities, or individual entity versus a tax group? Was it this TP was only the player, or there were angles, multiple situations
no.
around
So
it?
I mean, see, not TP was not the only factor, because see, once you are into one group, you obviously save your time and effort and cost on the compliance, because then you have to just file one returns instead of 10 returns. Then let's say if your one entity has some losses and another entity doesn't have losses, so you get to offset the losses and save your cash tax every year, which is very good for the group. I mean, if your particular entity is not performing, you at least get that boost. Your financial impact gets reduced by the reduced tax payment that you do for the profitable entities. So that was that are the other benefits of getting into the tax. But honestly, this is not so simple how it looks, because you have different grouping structure for VAT. You have different structure as per the group's requirement, as per the investor's requirement. Now, to change that legal structure to comply with what FTA wants you to, the 95% criteria, and the change legal structure for all the entities, it was a big hassle. It's not so easy. I mean, if you say make the group, it's done. No, it's not so easy. We had to go through a lot to get into the grouping, and eventually we reached there.
I think you touched very important aspect in the discussion out there. Integration of the information, or you can say the synchronization of information submitted in form of various taxes, such as VAT, excise, ESR, now corporate tax, and going forward maybe something else may come up, and in relation to that, global minimum tax for that matter. So since the multi-jurisdictional presence, so what kind of measures that you probably organization like yours have taken in terms of like technology, or you strengthen your processes, or you have more people, or you have a robust way of communication within the business? What really measures that you adopted, that whenever the information gets submitted, you have one word of truth across all these taxes? Because their requirements, their compliance deadlines are quite different. Like VAT is quarterly or monthly, whereas excise is monthly, ESR is yearly, corporate tax is going to be yearly. So how and what measures have you taken?
See, in our organization, we have different teams looking for indirect tax and for direct tax. And what we believe, and in fact that is what our vision is, we always try and use our ERP for all the information source. So we believe whatever information comes out of ERP is the only truth. And fortunately, couple of years back, we went into a new ERP system. Now, when we were getting into that, we created a lot of reports in the new ERP, which we require for VAT and excise filings. Now, that really helped us for our regular VAT and excise filings. In fact, the group for that matter, the group reports as well from the ERP, because ERP is for all the entities. Now, for corporate tax as well, we tailor-made that ERP again for getting the ready-made, P&Ls, taking some allowances, disallowances, whatever corporate tax allows you, disallows you, and etc. So we have specialized teams, and we have all the procedures in place, and we use the ERP the most.
I think you said right. Having one sort of information tool to provide necessary compliance requirement really makes life slightly simpler. But at the same time, it's very important to understand. A lot of people think about that. It's hard, but I think in my experience, and I've seen with businesses, that once you start somewhere, I think that this journey is in itself is an experience. So as soon as you start, you'll see a finish line slowly. And in ERPs, you can use various schedules, you can use various dimensions, and a lot of models and features are available in different sort of ERPs, which can help you out to simulate those information in correct format. But at the same time, there are various compliance tools are also available. So I encourage businesses to look into those as well. I do understand your busy schedule, Mayur. But one final question that I want to ask is that if you can share with the viewers out there, is that how do you see the corporate tax implementation challenges that is coming your way? Because understood the impact, you've designed it out there, But when it comes to implementation, what kind of challenges are you facing? And is there something that you want to advise to the viewers that how they can really be well prepared for these challenges ahead of them? And what did you learn? So, I mean, if you can share key learning from it.
See, initially when this law came, I mean, we were also of the view that, okay, this is like a normal corporate tax law. We already have this in India. We already have this in UK. We already have it in US. So we'll do everything in-house. I mean, but as and when the FTA was keeping on releasing the guides, the ministerial decisions, the law, and etc. I mean, it is not so simple. You have to properly interpret it, apply it to your case, and then plan it, and then you work with your management, cross-functional teams, understand the impact. So honestly speaking, the initial thought that we had of doing it in-house was completely wrong. We had couple of consultants on board to help us with the corporate tax implementation, and I can say with full truth that it would have been not possible to implement or plan this without having the consultants on the board. So, and as and when you go into the detail, because as and when you prepare for your first return, as and when now let's say we are in the end of June, what we are planning to do is a mock return for first half to see what is the transfer pricing structure looking like, how our internal transactions have panned out, have we properly applied the transfer pricing policy that we planned and we designed for UAE corporate tax. Now it is better you always have another set of eyes on your information, that okay, this is somewhere you are going wrong, this is somewhere you are right, because if you do it now, you will have another 6 months to correct the things until December. So we are now working on that project with the consultants that we have on board for corporate tax. So yeah, I believe it is not so simple how it looks. I mean, it's always advisable to my corporate peers that you always get consulted with someone, because there might be some small things which we might not be aware of. However, people on the other side are always aware, because they deal with lot of clients, and then they know what is the key things that we might miss.
Yeah, I think this is well said and right advice, because essentially keeping eye on the happening things within the organization, at the same time keeping in understanding of what the industry is happening around, what the law, new regulations are coming, how this regulation is getting interpreted out there, and what's the perspective people take. So I think it's vital call that probably taking some support initially will really help. So I wish you good luck, Mayur, in your implementation and your compliance ahead. Good luck and great learning, and happy to host you here today in the show and take like a lot of learning from your experiences. Thank you so much.
Thank you Anurag, for the opportunity. Thank you.
Thank you so much.